What's going on, traders? Hope everybody's having a great start to the month. My name is Shark. Thank you so much for joining me here. I'm going to be doing a little analysis, a video about the E-mini S&P futures as well as the NASDAQ 100. Going to look at some monthly charts, daily chart, weekly chart, get into some day trading levels as well. And I always love looking at some other data points that help me come up with a logical game plan for the next couple of weeks for the futures markets. Now, a reminder that this video is for educational purposes only and in no way should be viewed as financial advice. All right, so let's get into some of the economic data that we have for this week and see what we can take away, if there's anything we need to be aware of this week. Now, Monday, obviously over. Tuesday, nothing really on deck. Wednesday, things start to heat up. We have ISM services at 10 o'clock at 9:45, final services PMI. Initial jobless claims Thursday, December 4th at 8:30. Now, Friday was kind of interesting. I was looking because usually, first Fridays of every month, you get the labor report, non-farm payroll, but I don't see anything on here. We had the government shutdown, so that could be delaying. You can see here PCE is a delayed report coming out at 8:30. So I'm not exactly sure. I think I saw somewhere the date of when we're going to get those labor numbers, but I'm not 100% sure off the top of my head. I just saw it in passing, but definitely something I'm going to keep an eye out for because the labor market is front and center for me about kind of guesstimating about what's kind of going on in the market from more of a macro perspective. I certainly am in the camp of a possible recession coming up very soon here. And I really would not be surprised to see that within this year or into mid next year. But it's definitely a interesting situation, to say the least, out there right now in the markets with valuations and the government potentially, the Fed potentially lowering rates, really in a rock and a hard place right now for them. And it'll be interesting to see what they do. And I just hope everybody is ready for that potentiality of seeing a bit of a change overall from that macro perspective. But that's neither here nor there. All we have to deal with, at least for this week, is PCE at 8:30 on Friday, December 5th. Okay, so let's get into some charts here. Last month of the year, and boy, has this one flown by. And we're going to take a look at the monthly chart here on ES. And the main thing, this was the November's price action here, kind of getting, what would be at the bottom of a trend, a hammer, potentially a hangman type of situation coming on right here. But really what kind of sticks out to me is the low, basically the equal low that we were created from October, right? You can see it dip just, and if we want to get technical about it, the low from October 65.40 and the low 65.25 was the low of November. So about a 20-point difference there, but you can see we never really broke over the 9. Price is getting a bit extended from the 9 and 20. I'm still watching this overbought signal here on the monthly, which really has not fired yet. But the main thing that I'm looking at now is we really have a balanced price range, right? We really have a balanced price range right now going on, right? So we know now, right, either A, and this is certainly a tradable range, but as long as we are trapped in here, we could consider that potential reaccumulation for the next leg up higher. Or if we start to see that breakdown, well, then we could talk about that potentially being distribution. You see the 9, though, for the monthly really coming in nicely at those lows, with these monthly lows right around that 65.15 area. So sure, if we start to see some weekly closes underneath that, that's going to really tell us all we need to know for the market. But the same thing for the bulls, right? We break over those equal highs. I mean, in the month of November, we never matched the high it's about a 20-point difference on each side, because the monthly high from October was up at 53. And what do we get the high here from? Well, we got 69.09 actually, so it's a little bit even lower than I thought. Not a 20-point difference. I thought it was about that. But either way, structurally speaking, we're looking for that break over, and then it potentially looking for that retest for the long. And of course, the same thing goes here. So with this balanced price range, yes, it can be a little bit tricky to trade. There is a nice range there for us from that monthly perspective, but you can still get chopped up in this, and we've kind of been seeing that price action kind of take place over the last couple of days here. But we can make our equilibrium, boom, boom, and we kind of know a little bit of a range here that we are working with and what we want to do. So as far as a swing position, if I was not in a trade already, really would not be doing anything until I see a monthly break up and over, and then that retest, and then make a decision from there. But the one other thing that certainly is interesting to me is about that spacing, right? We have price up here just underneath, well, what are we, about 50 points underneath 6,900, with the monthly 20 down at 60.66. So quite the distance here from price. Oh, that's not what I wanted. From price, and actually I'm just interested to see about 750, about nearly 800 points right away. So that is quite a bit of an extension, and about 50 from the monthly 9 here. But that's fine unless we break underneath this. There's really no reason for me to be bearish at all on the market, other than that possible extension and overbought here. But that's really, neither here nor there. You just don't go short because the RSI is overbought or something like that. All right, let's take a look at the weekly chart now and start to break it down. Here you're able to definitely see a bit better those equal lows, right, coming in here at the November and October lows, right? Very clear area right here marked off for us. So we have that level marked off, and even if we broke there, right, we even could afford to come all the way back here, which was probably what I would target. So this is a warning sign for sure. If we start to break under these highs from back last year's highs, and right around that 6,200, well, then we've got another issue altogether. So it's pretty clear for me structurally right now. And even if they broke under that, you still have another last line of defense here. I mean, the bears would have quite the, quite the areas of defense here that would need to be broken for them to really take a foothold. But as it stands, all that I really need to worry about are these lows from October and November, which we already pointed out. Again, here we can see the kind of the more rangy price action right here. Again, trapped. We don't know which way it's going to go. We're over the 920, of course, and the 9 and 20 aren't that extended from price now. Caught up a bit there, so this is good. We're not too extended from that weekly perspective. The Momo is cooled off right here a little bit. I would love to see it down at the 0 line, and then that would really give us a little bit more of a springboard. But otherwise this can shoot back up. We're getting readings right now in the 6.575. Well, we'll just call it 6.6. This could go back up to 15, into extreme overbought levels before cooling off again. But really nothing. And, that big, it was the end of the world. It was the end of the world dip. Really what just happened? Well, just from the price action, we came into the monthly lows and we came into the weekly 20. So, nothing really to be that doom and gloom about. And you get all the bears coming out of the woodwork after you get a couple of down weeks. Really nothing too crazy. Although I was enjoying VIX being up and over 20. A lot more fun market to trade right there, right? Now it feels like this 16 VIX, you're pulling teeth again, and which is funny to say because 16 VIX is, we were trading the 15 VIX, 14, 12, before, and it's, I can't imagine what that would be like right now. So either way, pretty clear. Let's just open up. We did have a weekly chart. I haven't looked at it in a while. Okay, here we are. And yeah, you can see right here, top of the balance highs, equal highs. Really, I have 65.28, but I think we got a little bit longer, a little bit lower. But boom, let's see from the weekly perspective. All right, as long as we hold 6,800, 68.11, really no issue. The weekly 9 down at 67.53. It could come and retest that. I think breaking under that 6,800, start seeing some daily closes under that, opens up that door. But as long as we really stay over the weekly 9, I mean, there's really no issue at all, with the market. But I think under that 6,900, we can see a little bit of further retracement and probably come into that weekly 9. Everything looks pretty strong here to me. Certainly stay over 69, 68.11. We need to get over 6,900 and 69.15, we'll call it, over that 69.14, 15. All right, I'll see you back at all-time highs. And if we break over the all-time highs, I'll see you at 7,000. All right, so let's see if Santa's got 7,000 gifts for everybody's retirement funds and stuff like that. But at the start of January, we may have a very, very different situation. Let's take a look at the daily chart. Okay. And here we are. Okay. All right, for this daily chart, I have it right at 6,800. Right, you can see the highs here from the 29th and the equal highs here from the 17th of November. This 29th, this was from September. And pretty much the low today. That was it right there, retested. Boom. And that was the low. Okay, we're kind of getting stuffed here at the 68, 65 area. Right, we need up and over that. And then I'll see you at 6,900, over the 6,900 and 69.15. Well, we've already been over it. We'll see you at the equal highs. What would need to happen for the bears? Well, definitely under that 6,900. I mean, and then we were looking at the weekly 9, and if they can get under the 60. I mean, what may happen is even if we fall underneath the 60, 795, we could just end up hanging out and trading here like this. Now, if we saw that break, we can see the daily 9 here. If we have that break, then, maybe we can get something cooking to the downside if we see a break and then roll like that. But right now, it's really anybody's ball game with the edge, certainly for the bulls. Oh, this is supposed to be the daily chart. I'm sorry about that. So I was confused for a second. I was like, no way, the low was... today was right at that weekly level. Right, to me, just right off the bat, plenty of room here on the daily. We're not overbought, oversold. Plenty of room here. Well, what does this look like? This just looks like reaccumulation, right? Above the 920, they just crossed, hanging out above this area. Could just end up continuing the reaccumulation. Just looks like a big old bull flag to me. Right, and we'll be ready to rock it up and take off. But let's see if this flag starts to roll or if we get the breakout. But to me, looks like a flag. We're not overbought on the daily. We'll get cooking once we get over that 68, 65. So All right, let's get into some day trading levels here for ES. I was hoping to get through this video before and you can just see here, really, when we break it down onto the 30, really can see that balance. Price range. Boom, okay. All right, here's our day trading. You know, look at this right now. I'm wondering. This is just on a 5-minute, but it's looking a little potential diamond toppy here. So that is interesting. Okay. Or I guess we could also kind of get a megaphone type situation, broadening. Right. Okay. So for the bulls, immediate support here, 68.40, 68.38. Need to hold that. Need to get up and over 68.43. Get back up and over that. Probably come back into equal highs right here. Up and over 68.52. All right, well then we'll be coming in. You got a little bit equal highs here at 68.57, but all things being equal, get through that. We'll see back at these highs here from today or from the Tuesday session, depending on when you're watching this, if it's yesterday or today. Either way, probably look for those highs back over that 68.55 area. Could be another short area opportunity up here, but if we do reach here at the for a third time at the 68.52 zone, could be a triple top, and watch for potential sells right there. But if they aren't able to get over 68.45, 68.43, we're still kind of trapped there. We'd have to start to create a lower low, because even within this price area, this is a little balance range too. So remember, all charts are fractal, right? Everything goes and everything can fit inside of each other like a Russian doll. So that being said, to start to change the structure or break out of this balanced price range, smaller one albeit, under 68.35, 68.38. Okay, then we get a break back down to the lows, 68.32 area. Keep an eye. It could sweep down value area lows. Now I'm just on the 5-minute chart right now, so take that a little bit with a grain of salt, but at least from this profile, a volume profile, 68.30 is the value area low. Could find a bid there, and that actually wouldn't surprise me, right? Because we've got our swing low here, higher low, higher low. We came down here. What would that be locking in? Another higher low, and then from there we see a lift off and up higher. So that could definitely be a potentiality, but I would say if we get under that 68, well, we're going to call it under 68.30 here. Watch for these matching lows, 68.26 being touched. If we start to break down underneath here, we'll look for this slight sell side, just around 68.20 area, just a little bit lower. What's the low? 68.17 thereabouts. So but I didn't really have anything until we get to 68.15. Under that, 6,800, under the 68.15, 68.09, then 6,800 right down here. Then the fun starts, and we can really start selling off. So as we already talked about, on the bigger time frames, breaking that 6,800 really is going to be crucial to be able to see some of these lower targets in the 92s, and then potentially all the way down in the 80s. We can just call it in the high 70s. So there's our pathway for ES, and there we go. All right, so let's get into NQ, which think we already have some stuff on here. Let's take a look at the monthly. You can see here, tech's really been a bit stronger. You can see already in this December monthly candle. Okay. Ah, here's a blank one. Okay, beautiful. All right, a little bit same situation. Sweep of the prior month low, recapture, rip, right? So, and we have basically, and I'm going to go through this one quicker because it is basically the same situation as far as the monthly balance price range is concerned. Here, we're pretty much right at that equilibrium, right? I know these aren't 100% straight, but you get the idea. So we really just want to hold, right, the low from that's already been created here, the monthly low, which would be that 25,193. I'm going to call it 25,195, and breaking under that, it can open the door, come back down into the September monthly high. And I think that that's where things start to get interesting for the sellers once again, under 2,500 for sure. But 2540, I mean, 40 points the NQ. All right, I mean, but you could really say from this manipulation wick down to the body can give you a little zone there if you like. And then from that monthly perspective, say, okay, you know, if we start to get back under this area right here, that monthly high there and the body, okay, we get back under, then we can start talking about coming in and potentially trading down to these lows, which actually match August lows right up in here, and then see about sweeping down to this monthly sell side all the way down up in here, but back into the monthly 9. But the only way that's going to happen is if we start breaking really under this 24,850, we're going to call it, and then we can see that pathway kind of take place. You know, how long it would take to develop, but that I don't know. But something to that effect. And then, well, certainly if we break the November lows, then then we got another thing coming. But that's neither here nor there. Otherwise, as long as we hold that, right, even if we pulled back, even from here, even if we had pull in to here, right, could give us potentially a better trade location. And then, you know, ultimately, obviously, we're going to be trying to get up back at these monthly range highs. But for now, we're in a cautious bullish state. Let's see this come up a little bit higher off the midpoint of the range. Let's take a look at the weekly. Futures markets are about to open in 4 minutes. And I'm not a fan of that because it's probably going to slow down my processor. Okay, so similar situation right here are these balance highs, right, that we created here in this week of, what is this, August. And then we started to break out of it in the start of September. Boom, you can see the retest here. You can see the retest here the week of the 24th and the low of the 17th. There was really no issue unless we started to break that balance high. So really nothing there to do for the bears on the bigger perspective. And what would the bulls need to get over? Well, we're kind of getting into this gap right now, so we're right in the spot that I would say that the bulls really need to get over to start to recapture. But over the weekly 9, no issue. And right here, just going to look at that weekly high from the week of the 20th of October. I'm a little bit high on that one. There we go. So we're right on the precipice there of being able to get up and over and kind of invalidate. Because even if we were to look at this like a potential head and shoulders, right? Up one, down one, right? If we get up and over, it's going to invalidate that completely. This was our weekly neckline. So far, it never played out, but you potentially get a rejection there and see if we come back and retest that neckline. And if we do and break it, well, we probably would trade all the way down to the next big spot for the bulls down in the 22,000s. I mean, wouldn't that be fun? I would love to see that. Let's take a look at the daily chart. I don't think this is the one I've been using. Let's see. Do I like this one? I had one on here. Alright, let's just use this one for now. Okay, from the daily chart perspective, right? Got the 9 and 20 sitting right here at 25,200. Would need to break under that. Again, it also kind of looks like a bull flag. You can see the strength. This bull flag breaking out. When we were looking at the one on ES, really wasn't breaking out. Still some areas, we're mentioning the gap here. Still some areas where it could reject. I would definitely watch out at the highs from, what day is this? The 13th, right? This whole zone kind of is showing me where we could have a bit of an issue. And I'm happy to do this. Oh, here comes the market. And we're open. So here, this is, I'm interested to see what happens. Another thing I want to say with December, you can get that low volume. Everybody mentally is kind of checked out for Christmas and the end of the year. So we could really get grindy price action, smaller moves, inconsistent price action. So just be aware of that. And certainly as we get closer to Christmas, there is really no point in trading. It's going to be more headache than it is worth. But 25,940, 2,600, that's the zone. Let's see what happens when we attack 25,745. You can see the wick, so it can play some games, but you got a zone here. If you were looking, of course, we're looking at the daily, so for a swing perspective, you got to give yourself some range, of course, daily there, especially on NQ. And unless we get up and over that, we still have some issues, but getting over 25,550, or excuse me, 750, that opens the door possibly for that 25,945, 950 area. Over that 2,600, over that we should come into the equal highs up here. And for the bulls, or excuse me, for the bears, got to get under 25,500, 25,395. Break that. Show me the 9 and the 20 again. Could be a nice opportunity there for a buy right around the 25,200 zone. The 20 EMA is sitting at 243. The 9 is sitting at 300 basically. But if we get under that 25,200, I will look for trades back down to 25,30s. When we break under 2,500, well, then that's when we can have some fun and possibly trade back down into maybe these lows here from the 6th If not, maybe we have an equal low, which might be a little bit more viable, a little bit lower, right around this area here at 24,615, something like that. I like that one. Let's go. I'm gonna mark that off. Because we do have multiple points there in this area, right? You see one here, 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 close, here, here, almost there, close. So, okay, so right there, 24, you can say 24 650s, 24 620s, but in that area, because you can see the wicks, right? So in that area, I think if we break under that 25,000, we could easily come back down another 400 points. We might have a little pit stop at the lows from the 22nd. That wouldn't surprise me either. At 24,800, I could see that happening as well. But we're far away from there right now, so we'll get there when we get there. All right, let's look at some day trading levels now for NQ. There we go. Ooh, a little gap up. Baby gap. Okay. Bulls ultimately just need to hold 25. Oh, this is a little off. 25,550, we'll call it. And as long as they do that, and where are we now? Okay, that's still 100 points lower, but that's not what I wanted. But in that area, certainly need to hold that. And as long as we do, I would remain pretty much bullish underneath that 25,550. Could trade back down 25,530. Starting to get under that. All right, watch out. We'll probably trade back down the 25,500s. Maybe the 25 teens here, 505 potentially in this general area here. And if we break under 500, right, well, let's say if we break under 25,495, then we can look for further sells. You can see how important this area is right here, right? And this pretty much the lows, or you can see some big reactions. The lows kind of came in, swept it, but right in this 25,440 area, got a little bit lower. 200 starting to come up nicely on the 10-minute as well. Bulls here, they really need to get over this 625. I have a pivot. You can see you're having some issues here. We had issues there earlier as well. I think I did do one short in that zone today. But up and over that 625, back up towards the highs here in the 640s, and then over the 640s back to the highs of the day at 670. Up over 670, I will see you at 25,700 would be the next, and we kind of mapped out already the downside for the bears. So there you have it. All right, let's take a look at some of the other charts that I like to look at for some analysis on the market overall. First one I'm going to look at now, normally I flip over to the dual charts, but I'm going to start just looking at the RSP here for another sense of our breadth in the S&P. And let's take a look at this. We'll just do this one on a 4-hour, why not? Now, if you guys don't know, let's do it on the daily. Now, if you guys don't know, the RSP is the equal weight of the S&P 100. You know that the S&P is not an equal weighted ETF. Apple weighs more than Microsoft and Oxy weighs less than, let's just say, let's just say CCL or something like that. Right, they all have different weightings, but this one weighs every single stock equally. So I like to look at this, and it really gives me a better picture of the overall broader strength in the market. Right, if the Mag 7s are just rallying, oftentimes you'll see this kind of flat, and you'll see SPY ripping up, and that's how you're not getting an expansion in breadth, and it's not total market participation. All right, pretty defined equal highs here on the RSP. And, oh, this was a weekly chart. Let me do this. Let's go back to the weekly one. Let me delete these. And we will get ourselves a little balance. You can see now that the markets are open. It's not really driving my computer crazy, but it's not liking it. Boom. Boom. All right, there you have it, right? Pretty clear for us on those balance range. And now we'll know, right, up and over that 192.40 area breakout underneath 185.15. Probably come back and see these lows once again. And until that happens, I would just say just be careful. Or also, if we see this start to fade down, it could give us some hints about overall weakness coming into the market, and we'll know that maybe it's just the top 5, top 10 stocks really holding everything together right now. But until further notice, we've got our zones, and we know here what we want to see from the RSP to broaden out some of this market strength overall. Okay, let's see what's going on with the QQE. And right now, RSP and ES SPY, they're pretty much in lockstep, so no divergences there that are going to really point out to me. Okay, QQE, you can see the difference. Much more broadening in tech. So I'd expect this to probably go back to 104 as it stands. A little outside of value, but nothing crazy. But tech certainly stronger. All right, let's get over to some of our other data points here. Let's go to VIX first and the put-call ratio. Ooh, they got a little extended here. Push back to reality. VIX couldn't get saucy. Needed to get over 29 basically. Could never do it. Under 18. I mean, now, as long as we hold 16, 15, 72, can still see some moves back up higher to 1820, but it would need to break that 1570, we'll call it, for lower VIX. Please don't bring that upon us because it's going to make everything so boring. But we still have the opportunity to slingshot over here, maybe come up and reject. Will we come up to this one and reject? I'm not sure. Or maybe we come back, pull into here, and then do this. But it could still reject as well. But either way, as long as we hold this, should be okay for VIX. Nothing really here. Contrarian signal came up on the 28th. No wasn't looking at the market then. Okay, and here we are with the yield curve. On inverting, typically it is about 2.5 years after the uninversion that we get the big R word coming in. So we're just about there. That's just about, it's been uninverted now for I think 2.5 years. It's kind of, I think this one's going on longer than normal. Anyway, since 1950, this has never been wrong. Will this be the time that it is wrong? I don't know, but watching that labor market. Either way, inversion, re-invert. The only thing that the Fed can do is mess with the 2-year side of the curve. These things take a while to play out, but this is, re-inversion is definitely scary. The 1-day VIX now could not get over that 32. This was important to get over. Over that 2150 is really where it starts to get fun. And obviously you can see here it did get a little fun, but it needs to get over the 3125 and then things really get fun. Let's see if we start to get the 1-day VIX back down into the 7s. Maybe that brings the standard VIX down into the 15s. But if we get down to the 7 to 555, that would be starting for me to look a little contrarian. Not quite there yet for any type of, hey, this is a red flag, watch out for a burst of volatility. Let's look at how many stocks are trading in the SPX, right? ES above their 50-period moving average and their 200. Okay. All right. Well, we are just about 49% over the 50-period moving average, doing a lot better from the lows from about 28-30% there. We broke over this little downtrend. I have been watching. Let's see from here if this is setting us up for the Santa Claus to come in and just rip us right back off as we back test this trend line and basically sit at that 50% marker. That's what we want to see for true strength in the market overall, above that 50% ratio, and we are just 49. We're basically right there, but this could be the spot here. Come in, retrace, boom, and we see the markets rip up higher. Still a bit of a downtrend here on the 200. Obviously a slower moving average. Still about stuck. Over 50%. That's good. So really no call. I would say the one divergence. I mean, we're still on a downtrend here, but it just, the 200 moves so much slower. I'm not putting that much stock, pun intended, into it. So the main thing for that, I'll just look over 50%. New highs versus new lows. What do we got here? Over the zero line. Are we over the zero? I was about to say I was going to guess 75. We're at 54. Yeah, kind of meh. Over the zero line, great. But nothing impressive. Nothing really saying anything super contrarian for me. Look at the junk bonds. Here, another area where I would be interested. Oh. Okay. Well, this is interesting. Now, they are fighting back, but this should not be like this. We shouldn't have. What is this telling us? This drop? Some sneaky here. So I would say this is our first red flag. Potentially, this divergence coming in with the junk bonds. This is interesting. I'm gonna look, and I wonder if there was some Fed speak. I mean, Powell did speak on Monday at 8, but I am not sure why the bonds died like that. That's, or at least the junk bonds. That's, and I think I saw TLT down quite a bit as well. I don't know if that was Monday or today. We will take a look. But this is not right. There's something's up here. So watch out. That's interesting. Yeah, of course, I'm not talking about a crash or anything like that, but let's see some downside here. This divergence, this should not be like that. And speaking of the bonds, why don't we take a look at what's going on over in bond land? All right, this balance break still holding up pretty nicely here on the 7-year. Medium-term bond. Let me extend this. So, no real breakdown, no real cause for super concern there, but you definitely can note the divergence. Once again. Okay, so I really wouldn't be shocked to see this actually break. Okay, this bond ratio, which measures the 3 to 7 midterm bond to the long bond, is still over the 50 here. If we would want bonds to go up, if they're going to signal that they're going to go up, they should be below this 50 period moving average. So this, to me, possible inflation concerns here with this bouncing. So let's look at the yields. I'm sure the yields are probably up. This is just going to be credit spreads. We're just going to go down a little. Well, while we're on the yields, why don't we just look at the credit spreads after? What are we, about 4.2? No. Trying their darndest. If they can get over 41, right? I mean, we kind of stalled out here at 41.5. What is this? 41.70, 65. But as long as it holds over 41, these were little fake outs. It should come into 4.2 again. So we'll see about yields and potential inflation concerns. The dollar really had a nice run. Got it up above 100. Balance range, died. Retested for the short. And collapsed back down to the equal lows from the start of November. And as long as we stay under 99.50, I mean, it looks like it's tried to break out here again. It seems like the dollar is going to come lower once again. Watch out for that 99. Probably drop another 30 cents or so. Yeah, maybe just come down either into these prior lows or these lows. But dollar looking weak overall. Plenty of room down on the downside there. So not even oversold or anything. Let's take a look at risk in the market via the credit spreads. How are people feeling? Well, the shorter spread starting to get below that 50, but not convincingly. The longer on the corporate, saying some risk still there here, saying some risk still available or still present. This is trying to say free and clear. But this, so do they cancel themselves out? Maybe. This is not a total red flag, but it's definitely a little caution for sure. Here is that same bond ratio we were looking at earlier, telling me that TNX would probably want to go up. And the same here, trying to get back over the 50. Is the skew telling us anything? Let's see. Nope. And let's look at VIX futures. I think we're back in contango. Yes, sir. Back in contango here on the VIX futures. All right, so this is good. Risk on. Risk on. Nothing with the VIX futures that's saying anything worrisome. VVIX, volatility of the volatility underneath the 100, underneath 105. That looks suppressed. Get contrarian when we get down into the 80s if we do. Nothing crazy there. And I think that's about it. All right, guys. Well, thank you so much for joining with me. I hope that this has helped you gain some perspective in the upcoming weeks in the market. Remember, holiday trading just pretty much all month, so just be a little cautious. I need to work on lowering my expectations for the market moves as well, as we were just trading up right in the 20s and now we're back down at 16. So I'm going to make a note of that for myself, as well as the holiday trading. The days coming into into Christmas, the markets might be open. Really, I implore everybody not to mess around with it. Take the time away from the markets, reset the mind for the start of the year. Start thinking about brainstorming those goals too. What are going to be your goals for 2026? Start to maybe write some of those ideas down, and certainly you can share some with me in the comments. I would love to know any of them. We'll certainly get another video out there before the end of the year, but with everything behind us now with the analysis, again, I wanted to thank you guys so much for joining me. If you haven't already subscribed to the channel, please do so. Helps me out a lot, and it is free. Would mean the world to me. If you like the video, thumbs up. If you hate it, thumbs down. All good for me. And again, wishing, I hope everybody had a great holiday, and I will see you guys out there in the markets. Remember, trade your plan your trades. A prepared trader is a profitable trader. Thank you so much for joining me. Let's have a great month together. Take care.